Good morning, everybody. Welcome to the Moving Markets Podcast. It is Tuesday, June the 9th, 2026. You may have heard in the background there, that was the opening bell. The stock market has just opened. Trading has just begun for the day. Off to a great start so far. I mean, it's always tough in that first 2, 3, 4 minutes of trading to know what is going to happen at the end of the day. Will the rally that starts out continue? There's always a chance you could get a headline that sort of flips things in the other direction, and you want to be careful that you don't judge too much right at the very beginning what might happen down the road. But that said, we're off to a fantastic start. It's great to see things moving up instead of moving down. Futures were all pointing up very nicely. A lot of that is because oil is down this morning. This has been the story for a while now. This is not a new story by any stretch. Oil back under $90 a barrel, coming down. Stock market up. I think there's only been one day of trading that we saw oil going up and the stock market also going up, and that wasn't one of the days where it was up really, really high. It was up a little bit. So we'll see what happens as we move forward and as the day goes on. See if this continues, if we can get more and more. But off to a very good start for the day. Yesterday we got back a nice, decent chunk of what was given up on Friday. Today we're getting more of it back if it all holds as the day goes forward. Looking at live numbers right now, Dow Jones up 285, 292, 297, up over 300 points. I'm looking at another screen where it's live. This CNBC screen is just a little bit behind. S&P up 45, almost 46, and the NASDAQ up 195. Interestingly, the NASDAQ not up as much as it was pre-market and not up as much as it is right here with this little bit of a delay, but the Dow having an even better day than that. Biggest thing for us right now is we've got Applied Digital going up very, very nicely. Let me show you 4 stocks that we are following and watching very closely that are all having good days, and all of them are going to give us that opportunity to maybe get out with at least a break even, if not a profit. And I'm just going to go in alphabetical order. So we've got AMD trading barely back above 500. AMD does not have to go up above and stay above 500 for us to possibly get out of the trade. Depending on how much money you paid to roll the trade at the latter part of last week when we saw it selling off, you've got to look. This is simple math. You look at what you originally got into the trade for. I think we got in for something like in the neighborhood of 410 to 405. Let's take worst case scenario and say 410. I think most of us added around 30 cents a share to roll it out, maybe 40. In fact, let's take worst case scenario here and say you paid 40 cents to roll it out. So your cost now is 450. I'm going to tell you right now, once you are at 450 or above, close the freaking trade. That is just that simple. Don't risk the possibility that this comes up yesterday and today and then dips back down in a day. If you get 2 or above 450, you don't even have to be above. And look, they're only up $7 and some change, $8 and some change right now, back down to 7 and some change. They're not up as high as they were right at the open. They may or may not finish today above 500. Today could be a day that gathers some momentum and they could keep propelling upwards over the next couple of days, and that would all be great. Now they're only up $5 a share. So look, I mean, we're in the first few minutes of trading. You don't want to read too much into it. Some people are already grabbing profit that they have and bailing out very quickly. They're saying, look, I was way down in this trade. I've got some profit. I'm getting the heck out. That's great. I wouldn't blame anyone for doing that at all. But what I'm recommending is be really, really smart. If you see an opportunity to get out for the amount of money you are into the trade at, or for a very tiny, tiny loss, We can live with those small losses. It's the big losses that we want to avoid. We're going to lose money on a trade every now and then. You've heard me say it. If you've been with me for anything more than a year, you've heard me say it hundreds of times. I hate losing money on a trade. I'm never going to, I don't care if I'm worth $1 billion or more one day. I'm still going to hate losing money on any trade I place. But the reality is I can live with the small losses. When they're small controlled losses and there's not a lot of them, I can live with that. I can go to bed at night and say, hey, this worked out well, maybe not as well as I wanted it to originally, but it worked out well, and I'm going to be happy getting out of this trade where I'm at. And that's the view you've got to take. So be smart with AMD. Look, they're only up $4 and some change now. So already, I mean, if you just look at this 1 day intraday chart, just the very, first 5 minutes, are we even 5 minutes into trading? Barely over 5.5 minutes into trading. You can see they already, shot way up, and they're already way back down here. That's probably going to continue for a little while until they either gain a little more momentum to the upside, or until they maybe flatten or sell a little bit. It's too early to tell. And we don't want to, like I said, we don't want to read too much into what's going on right now because there's a lot of time left for this thing to trade. It seems kind of weird to me that the NASDAQ is up almost what it was pre-market, but something like AMD is not carrying the load of that or helping with that in as substantial a way as it looked like it was going to be right at the open. Okay, so there's where we're at with AMD. APLD, it's a very similar story. At the open, they were above 55.5. That's where we want them to be soon. There's your 55.5 right there. If you can see that line on my screen, they jumped way above that. Now they're a tiny bit below that, but it's a much improved trade. The mid price on it is way up above where it was. And again, just like with AMD, if you see an opportunity to get out and exit with a break even or anything positive, you take it, you get out. Now, if AMD in the next, and this counts for, I was meant to say Applied Digital. If Applied Digital, but this also pertains to AMD. If over the next 30 or 40 minutes, while you're able to tune in and watch the market, if all of a sudden they get on a roll and they surge and they start going up higher, and it starts to feel like, wow, not only is it going to go above 45.5, it looks like it's just today heading back in the direction of 50. And if that starts to happen, you don't have to bail out for a break even or for barely any profit. What you could do, like let me give you a real life example. I've got a fair number of contracts on APLD. My position on the 43.50, 45.50 in the money bull call spread. It was in the money when we started it. My position on that, I've got 20 contracts because I got into 10 contracts. Then I added 5 more when the price was down a little bit. Then I added 5 more when the price was down a little bit. So I'm into 20 contracts at above break even. Like maybe 5-10 cents per share profit, I'm probably going to close half of those contracts. And then I'm probably going to let the other half run if the stock is still moving in a nice upward direction. And that's one way to play it. That's not the way you have to play it, but that's one way to play it. If I want to be smart about this. I don't want to do anything foolish. I don't want to get myself in a position where I'm not making good money overall in the trade, but I'm also going to be smart. Maybe at a 15% profit, I close all but 5 of those contracts if I can do that. So be smart, be a little bit creative as well. Okay, so the next one we look at is Caterpillar. Caterpillar, if you're not out of it already, the mid price I see on Caterpillar right now is $4 a share. I know we were profitable to our target profit around 360 or 365. Then we rolled it out a week. We added a little bit of money to it, but I think up in that up in that 375 to $4 a share range, I think you probably got a decent profit in Caterpillar. I'm same thing I just described with APLD. I'm going to do with Caterpillar. I don't have as many contracts on Caterpillar. On this one, I only have 5 contracts. I tried to get into some more, but I only have 5. On this one, I'm going to probably close 3 of them at $4 a share, which will be a decent margin of profit, a decent return. And then I'm probably going to let the other 2 go because we're $30 above where we need to be with only 4 more trading days if you count all of today as a trading day. And then I don't have to stress as much about those couple of open contracts. Maybe I set a limit on those for 435, 440, as long as Caterpillar remains up. And by the way, just in the time I've been talking, I have only been online now for not quite 10 minutes. AMD just ticked negative for a second. And that's why I say it's good that they were up yesterday. It's good that they started the day up today, but look at what they've given up already. They're down a buck. Now this shows 133. I show they just went down as much as 160. I'm a little puzzled by that. Seems to me AMD, no logical reason for AMD to be trading down, and they could be up nicely before the day is over. But that's why I say be smart. And if they have another little run like that, there's some profit taking right now, obviously. If they have a little run and they move to the upside and you see an opportunity to get out for a small profit, a break even, maybe a tiny, tiny loss, don't be foolish and pass by on that. Okay, so I had to go back to that one for a minute. Last but not least, Nvidia. Barring the fact that AMD has gone a little bit negative, Nvidia is frustrating to me because they moved just, by the time all was, the dust settled yesterday, they didn't have a huge move up yesterday. And so far today, they're having a very fractional move up, less than 1/3%, or right around 1/3%. Doesn't mean they can't catch fire and move up more. But I will tell you this right now, probably unless they really catch fire during the day today or tomorrow morning. They really, I might do it today. I might wait until tomorrow morning. But if they don't really catch fire and start moving up in a big way, probably we take the bull put spread, the 215 long put, the 217.50 short put, and just roll it out one more week in time. I do think Nvidia will come back. I think it'll come back more than enough. I think the sell-off Nvidia had Friday was way exaggerated. I think the little dip they took after earnings before they had a couple of days of rally was way exaggerated. Nvidia, in my opinion, should be doing nothing but going up. It should be a $300 a share stock. Every single bit of fundamental analysis for them says they should be a higher trading stock than they are. Technically, they're in a little bit of a bearish trend right now, so we've got to watch them closely. I show that we could roll out 1 week in time right now for about a break even to maybe a 3 or 4 cent debit, or I saw it go briefly to about a 10 cent per share credit. I'm not going to pull the trigger on that right now. I'd like to see Nvidia. They're up $1.34 now. I'd like to see them get on a little bit more of a roll, see them up $2, $3 a share, but probably today or first thing tomorrow morning, if they're not on a big run and look like they're heading back to 220 in a matter of a couple of days. I'm going to roll the trade straight out 1 week just so that there's not a risk of stock being put to us at 217.50. And when you're in the week of expiration, when you get down to the week of expiration, every trading hour that you get closer to the expiration of an in the money short put, your chances start increasing greatly that you could have the stock put to you. So we've really got to watch that one carefully and be ready to move on it. In fact, I would go so far as to say, if you can roll it out, if you can roll yours out for anything at a break even or no more than, I would say, maybe a 5 cent per share debit. And I think it would be smart to first try and get some credit on it if possible, but up to about a 5% debit, just to know that it's not going to get put to me, I'm probably willing to roll it out. I'm going to set mine briefly at like a 2 cent per share debit because it's mostly staying in the debit range and only briefly going to a credit. If you have time to play with it and possibly get a credit for rolling it out, I think that would be a smart thing. In fact, I may try briefly to see if I could get like a 5 cent per share credit to roll it out. But I am going to try and roll mine out in time, just 1 week. I think it'd be very wise to do that right away. And I think as soon as I'm done recording here, I'll throw that out on Discord so that people see it there. So those are primarily what we're looking at. Really quickly, the Signal newsletter trade that we sent last night. I'm going to actually go to the home page on the member website really quickly here. The trade that we sent yesterday for the Signal newsletter, I did not send any new triple play trades, and I don't know if I'm going to send new ones today. I think I want to focus on the fact that we've got a couple of them open and we need to work on them to get them profitable. I put this one in at 24.85. The mid price on it right now is 25.43. I think anywhere up to around 25.35, 25.40. I think it's still a good trade because of the fact that it's a longer term trade, a super easy one to adjust. The tricky thing about this is that the long call that we set up to try and get into this is already in the money because of today's market move to the upside. With all three indexes going up nicely, SPY, yeah, it's up $6 a share today. So what was out of the money at 740 is now $5.50 in the money. But I would say up to about 25.35, 25.40. It's a little bit higher than that right now. But I think through the day it will ebb and flow a little bit. And I think based on that, it's still a good trade up to about 25.40, maybe 25.45. I'm going to reset my limit order, I think, at 25.40 and see if I can get in because, like I said, I think that's still a good trade at that price. So that's where we're at on a Tuesday morning. Now, one thing I've got to tell you, tomorrow I am going to be driving across this northern Nevada, California, northern Nevada, and northern Utah. I'm flying to California tonight. Tomorrow, I'm driving across the state, coming back this way. I will be paying attention to the markets, but largely doing so from the front seat of my car. And so if I post something on Discord, it's going to be when I pull over and stop to fill up with gas or just stop for a break or whatever. But I will be paying attention to the market. I will be paying attention to what's going on. I may or may not be able to do a podcast right at the open of the market. In fact, I'm leaning towards telling you that I probably will not do a podcast tomorrow morning. I will do one tomorrow. It may be middle of the day or end of the day, but I will do one tomorrow, just not right at the open. If that changes, I'll put something out on Discord that gives everybody a chance to see what I'm doing well ahead of when I do it. So that's the tentative plan for tomorrow, just to kind of keep everybody on the same page. All right, I'm going to wrap up right there so I can get this recording online. Have a great rest of your day, everybody. And I will be paying attention at the open. I'll be listening to market news. I'll be watching it where things open. I just, I might be a little slow to respond to things on Discord, but I won't be out of touch. So have a great rest of your Tuesday and have a great Wednesday if I don't do a podcast until later in the day. Thanks, everyone. Bye-bye.